All right, so today, let's go. Father's Day, happy Father's Day to all the fathers out there grinding for themselves and their families. That's why I do this, as you can see. Um, you know what I'm saying? So I'm gonna go over one of my main intraday strategies. Okay, and as some of you may follow, I'm over on Baby Pips. Okay, as the master trader of Euro USD, 8 years in the game. All right, so I kind of posted, you know what I'm saying, a kind of little tutorial of you know what I'm saying, high frequency, high probability setup on USD. It works on all the majors, but it has the most consistency on, you know, Euro USD. Okay, so I'm gonna quickly review this, and I'm gonna make another post. I'll be uploading some screenshots and this video here on Baby Pips for you guys that are following, and then for the rest of my students that are actually working with me personally. You know what I'm saying? A lot of you guys, you haven't seen the full breakdown of this, but I'll walk you through, and then also we'll do a recap of what happened in the last week. So I'll be using last week's uh, trading data, you know, to show you what we have here. So, you know what I'm saying? Here's gonna go down the post. I'm gonna be sharing just one of my cleanest strategies for the majors, but mainly Euro USD, requiring little to no indicators because those are tedious to read. I will show price and timing is all I need. I look for an entry during London, and if I can't, then New York session is where it's gonna be at. Okay. And this screenshot here kind of just shows uh, how I'm looking at the entries there. Now, um, I kind of marked it here just for the sake of this picture. Uh, so the white is a fresh higher high that is not violated by the next high or by the next lower high, or just listen, go to the post and you can read through that. I'm not gonna read through this. All right, so I'm just gonna show you to go in there. So I use zigzag and 150 period moving average just to show the qualified market, which is pretty much a sideways market, non-directional market. It helps you get familiar with the qualified market conditions, and the zigzag indicators there, so you guys can see clearly what I'm counting as a higher low. Other than that, you can, you know what I'm saying, look at your own higher lows, and things like that, and then I kind of show you. So let's go into the charts, and you guys can look at the post there. So let's go here, and here is Euro USD, and this is USD Chief. I'll be using these. Okay, so let's look at beginning of the week, which would have been over here, 13th. Yeah, would have been the 13th. Okay, so this is the top of the week right there. Okay, market open. All right, price comes down right before London session. London session, we have a small high, little range, high. So the high, low, which is a lower low, and a high. Wait, we have a low, lower high, lower low, lower high, higher low, higher high. All right, so I'm gonna now put the trend line here. Okay, and then let's just put a ray just for the, because you'll see I could drag it out, but I don't put this rays on. All right, then we have market come down. All right, lower low, lower high, lower low, lower high, lower low. Okay. So usually what I'm doing is I'm looking for a trade, and you can see the major trend is down. So if I'm looking for a sell setup, I'm gonna mark these highs. Okay. All right. Okay, do something like that. And then the end of day is here. So it's lower low, lowest low. Okay. So I'm looking at the end of day. I'm probably gonna mark that as well. It's the end of the day low here and here. This makes a lower low there. Now, this was violated, right? But I would rather go there because then we have 1, 2, 3 waves. All right. All right. So now this is market end of day. This was the low of the day, okay, and I was able to mark that low of the day there. Now, from this, it would be a buy setup because I'm still looking for sales during this downtrend, okay? Overall trend, 150 exponential, right? Or linear weighted or whatever I have on here. Now I'm looking for sales above these levels, okay? Now, until market comes up, I'm looking to either wait on the market or I can kind of catch that intraday move up in that correction, okay? So that correction will be coming from here after we get 3 or 4 solid lower highs and waves. We are going to look for a breach of the low of the day, which would be coming in about London session, okay? Right, so this low was breached, this low was breached, which either one of these would have counted for this to be qualified as a setup here. So breached, okay. Now, when I do that, I'm also gonna sit there and I'll mark this off. Okay, that's a buy. Okay, this is a breach. Okay, so that's a breach. And then we're buying. And usually, when we're buying, we're targeting the next highs, which would be here. Okay. So buying there, reaching. Okay. Now, target here or here, but within the session, this is London. Right now, this is Asian. London is starting over here. Boom. Target reached there, if that was your target. Right. So at the same time, I'm able to close this buy setup. We have London high of day breaching this high marked here. Okay. And the reason why I didn't mark this high is because we already have some solid top highs here. I could mark this one. This one would have been breached as well here, and it still would have given us a signal to sell here. But just, you know, it could have breached all three of these, and this is the one that, whichever is the last one breached, is the one where you're looking for that entry from, with a call with the proper qualification. So now we have the original level that we were looking for breached here. All right. Now, when we do that, I'm gonna make these lines a little bit thinner. All right. When you do that, and select. Okay. So when you do that, what we're going to see is some type of reversal candlestick pattern. Okay. So after this one is breached here with that wick, we have a small body, large wick, and then a bearish candle. That's a sell signal right there. Okay. So if you were confident, boom, you could have taken that, and then we would have been in the market from there. All right. So we got that. All right. Now, what ends up happening? We have a continuation. It closes actually on that level. It's a little higher and then comes down. So there's two. All right, my bad. So where was I? Take a break real quick. So I think I was right here. Now we have a close right on the level that it was reached at. So that's good. We have a nice little bullish reversal single bar candle pattern, reversal pattern there, and then we have an engulfing there. So either way, that's also a trade at the close of that candle for me. That's a is that a hammer? That's a that is a hanging man, I think. Yeah, you'll have to look it up. But yeah, so that's close of that candle or close of this candle on the engulfing is a sell, which that would put me at the same price as there, except I wouldn't have had any drawdown there. So that's the trade signal there. So then I would go boom. Okay, we're getting in there. And then boom, bada bing, no drawdown off that entry right there. Okay, so now we have a retrace, beginning of New York session, which is expected. Okay, but I'm targeting this low and this low, or if I got two entries, TP1, TP2. All right. If you want to trade with the trend, I'm confirmed with this higher high, get on the lower high, another engulfing pattern, boom. Okay, so here, this level is breached. Okay. And because that level is breached, we're also going to have this also be a valid level, looking for buys below here, okay? Um, and we would get out this trade and we'd be entering off of this engulfing. So we have a candle bar close on that level. That's not a reversal candle pattern, but this is a reverse candle of this one. So this is a very strong price action candle for me. It's one of my favorite reversal candles to see. Usually it's coupled by an engulfing right next to it. But if I want to take a riskier entry, I can build my confidence off of that close, enter the market there, or if not, I'm entering off that engulfing. Okay, let's see what happens. Now, this being said, okay, price came up, and I'm against the trend here. It came up 25 pips. So, but I still know this level's down here. So price came back to entry at this point. I'm anticipating a breach of this low. Okay. And this is end of day as well. Okay. All right. So breach of that level comes in here. This level did not necessarily get breached. Price closed upon there. Price came back. Entry. Boom. Or depending on this, okay, this trade, right? I'm in and stop loss is below these lows here at about 20 pips, okay? So I'm in there, taking a riskier trade there. I'm in there. Okay, breach this level there, in there, okay? And then we have another breach of this level here, okay? And then I'm taking another entry if I feel like here, all right? And I'm targeting these highs, this high, all right? This high. And at this point, this high was violated, okay? Um, I'm gonna take off the ray just so we can know which levels were violated and already tagged. So that level was tagged, filled. All right, so we would then have access to these highs here. This was the next level to be breached. That's the high in between this high. So if that level is breached, this will be high. So here and here. Now, that level's gonna be the target for these buy trades, okay? Now, this was filled and breached there, okay? And what I'm gonna do is make that trend line, okay? All right. What's going on? Trend line. Okay, that ray needs to go off. Okay, there we go. All right. Breached, breached, and then this one's breached as well. Okay, we're targeting these highs there. 1, 2, 3. These highs are gonna be tagged, so these are kind of lesser aggressive targets. All right. But if we had to, boom, boom, we're targeting here. And then if this is breach, we're looking to sell above here. And if this is breach, we're looking to sell definitely above there. Okay, so this is our sell area and closing of our trade area. And if you want to be conservative, we can close a trade once this is breached as well. So let's just mark that real quick. All right, so this is end of day right here. Boom. Okay, so this level comes in just right before London. Okay, that is yep, right before London. Okay, that's breached. Okay, so I would start taking profits here. Could sell it from here, but I'm pretty sure we have opportunities being this close, sells above here. So taking profits off of here. All right. And we have a close breaching this level. Now, this candle right here is not necessarily a reversal candle. So I wouldn't sell on that close of the breach. Next candle, reversal, small body candle, wick to the high, we're selling. Okay. So we have a nice breach of the highs. Okay. And we're still technically in a downtrend market overall, but we're going, this day was a sideways day, which is great. So on sideways days, there's usually room for buying opportunities and selling opportunities. Okay, beautiful shorts, beautiful longs right here. All right, so a breach, and then we have another entry there. Okay, now comes down, lingers. All right, so these highs almost breached this level. So it doing this at this point, I'm looking to see it actually breach this level. They're just so close together. All right, I'm taking off profits. Okay, at this level, if I didn't take it off at this level, okay, so market's starting to come down. Oh, fake out. Okay, not yet. Okay, boom. Okay, so now we have a strong breach and close. And again, this is not a reversal candle, but it's a strong volume. Looking for momentum to slow down in the next candle. And that's great. I'm looking to sell that. Okay, so we have another breach. All right. Okay. And then boom, this candle closed. We're getting in. Okay. Targeting, we have a low, higher low, higher low. Okay, so conservative target here. All right. Aggressive target down there. Now these levels are breached. So I'm gonna go like this, take the raise off. This trade. Let's see, let's take the raise off. And let's just do that. All right, so we have this level breached as well. So we're gonna take those rays off. This level is breached. Okay, that was just for the targets. As conservative, yeah, conservative target right there. All right. Okay. So what we're going for is levels down here for the sell. Boom. Boom. Okay, that low is not yet breached. And then we have market going further and breached here. That is perfecto, or that is typical, or that is what it is, because market will do the same things over and over again. Like I said, this is a high probability and high frequent uh, trading setup pattern, however you guys describe it. Now, market breached here. I don't see reversal candles anywhere close. So I'm going to see how far down it goes until I see a reversal candle. So when these levels are breached, then I start to pay attention to price action. Okay. So I'm looking for rejection, wick action, momentum, slowing down, or I'm looking for strong volume in the candle, a large volume candle closing right on that level. Okay. And then I would be looking for a reversal candle, small body right after that. And if not, I'm looking for, the lesser, like this reversal pattern here is not as strong, okay, but it was valid at that level, okay. So, but otherwise, if I get a strong candle, strong volume candle close, okay, then I'm paying attention to a 2-bar reversal play. Now, if like this here, strong volume candle close, the 2-bar play here was not necessarily ideal. I wouldn't be taking that. So I'm looking for a valid, price action entry here. Now, that's one of the key things about these levels. Two is what levels to trade based off the price action happening at that level as well. Now let's see. Okay, see, it goes down further. So at this point, I'm looking for, okay, and this is also market in the day. Okay, so do we have an engulfing? Should we take this? Okay, it's not really, it's kind of a sloppy engulfing. Okay, it might give us another opportunity. Okay, and it does. I think there was news here. Yep, this was FOMC was last week, so most definitely. All right, so let's see what happened. Okay, price shot way down. Now with euro, I like euro because it's so liquid. The volatility is not going to take you out and blow your account. That was a 20-30 pip drawdown. Okay. So, but still, see why we waited? We're looking for an ideal setup. Now, this large volume candle next to this candle 15 minutes after news is probably one of the most perfect setups. I mean, I have an entire news trading strategy, but we have a large volume candle, small body, high wick action, momentum slowing down after lows are breached. Even though the news reaction was a bearish candle, I'm not convinced the rest of the day is going to be bearish off that FOMC event. Plus, the interest rates that came out that day were negative. Okay, so when the USD takes a hit, when you're trading Euro USD, when the USD weakens, the Euro USD is going to go up. Okay, when the US dollar weakens, when the US dollar strengthens, okay, it's going to be against the euro, and the price chart should be in a downtrend when the USD is showing strength against the euro. Okay, so those reports we know were negative for the US dollar, so that also adds to a bullish move here. Okay, so I don't really trade fundamentals except NFP and FOMC, but I'm saying those are the most basic. Interest rates and employment is probably the most basic, pretty simple to understand. Now, if I go here, I'm getting an entry at the close of this candle. Okay. And let's see what happens. And then what I'm going to target, okay, is I'll target these highs. Ooh, there we go. Conservative profit taking would be here at this structure. Boom, we're tagged in, we're tagged out. Okay, that move right there. Stop loss at the lows, about 20, 30 pips. Okay, 480. Okay, that's yeah, that's almost that's a 1 to 4 damn near. All right, no, that's like 30 to 80. That's like 2.5. No, that's like, yeah, 30, 60, 90. Yeah, just below a 1 to 3 trade right there. Right. All right. So we're going to take this. This level was breached. All right. That level is breached right there. We're targeting these highs. All right. Targeting these highs here and above. Now this one I'm gonna put array because that's a new level. All right. All right. Now, when you have these lows priced in here, we have a low, high. All right. Now, at this point, we're looking for the next. So we have a high, 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 lower, low. Okay, so that could be level. Then the price is dipping down all the way here into London session. Low of the day, London breached here, right? So if we had this level breach, I'm not going to mark it because it wasn't a strong enough wave. But if so, all right, we have this not really showing that much of a reversal. Plus, we're near the moving average. So in the moving average sideways, I'm not taking positions that are right on that median, okay? I'm taking positions on the swings that expand away from the median, okay? So if you look at all these entries, they're taken as they've expanded away from the median line, okay? Trade taken down, it's expanded away from the moving average. Price expansion, trade taken there. Price expanded back down below the moving average, right? You know, price expanded up. So there's nothing really down here, breach, and then it expanded way down here. So when we get a signal, right, and a breach that's happening right on the moving average and a signal right that close, we're looking for the next available reversal pattern. So we got bearish movement, we have an engulfing pattern there, okay? That could be valid. All right, I'm not really gonna mark it. I'll just probably do some type of you know, shape. I don't know, but that's not part of this strategy. That's a different strategy. Right. All right. But I'm still holding these buys, so it came back down to entry. So conservative target was here, aggressive target is up here. So the fact that price came right back down to entry, this gives us another buying opportunity because we know our bias has not, our order has not been filled on the other side yet, right? So there was no new signal, but this was a secondary signal based off the first signal, okay, here, right? So and you just, to take a trade like this, you would have to be confident and pretty aggressive, but there's no need to get in the trade again. It would just take patience for you to hit your target up here, right? So I'm just letting you know the market, it'll do things, but what's not going to happen, it's not going to violate these lows after giving this type of signal. We'll see what happens. Price came back down again. All right, and even this gives us a low and then a low violation there. That would be valid because it is happening in New York session. Okay, so we have a low, high, higher low. All right, signifying buy. Bullish trend. Then we have a breach. Okay, we have a breach there, and then we have an engulfing candle uh, at that. So we have a breach there, and then an engulfing. That's great. Okay. So we didn't have to worry about the setup because we had a setup at the same level, uh, and it was cleaner. Okay. So boom. Okay. There we go. There we go. Boom. Level breached here. Highs breached there. Okay. So we're closing trades at this point or taking partials. But after this news event, like I said, you have interest rates. So usually this trends for the rest of the you know what I'm saying, it'll go for a while because that was now the shift. And if you looked at the dailies, this is actually a daily swing low we're at right now where this news event came in at. So a lot of those you know what I'm saying, full scope of things, you know what I'm saying, intraday, you are paying attention to those things. But I was aware that we're in the downtrend, so I'm going to take sales as long as I can until the market shows signs of that reversal. Now, with that full scope, okay, looking at the daily level, I was anticipating a daily reversal. So with the help of FOMC negative interest rates, right, gave me a bullish sentiment. So holding this trade, right, and taking an aggressive target here, but also not even taking all the positions off because an intraday can easily turn into a swing. You know what I'm saying, for those experienced traders knowing when to do so. It is very hard to stick to your strategy when you kind of switching between intraday and swing. But like I said, only for experienced traders, you'll know when and what to do. So for me, I would know after something like the FOMC and then the daily bias that I would have had, expecting a reversal pattern, this pricing in a low of the week and month, and then a higher low after, you know what I'm saying? And then I'm looking to at least hold something. So let's see what happens. Okay, boom. And I was able to squeeze a little bit more out the market. Now, at the same time, we have a breach here. So that means I'm now looking for another sell opportunity, right? A breach here. That candle will not qualify just because it would qualify normally, but my sentiment is I was giving it a little bit more room to squeeze that bullish price action, okay? Because that is a strong trend, right? So I'm paying attention to all those factors as well, right? But if you were going to trade and you just took that, because it was the bearish candle after this strong volume candle, okay, cool, you get stopped out. My stop loss on these trades is anywhere between 15 and 20 pips, okay? So you would take this and then, you know what I'm saying, let's say you took that, you would get stopped out on that candle, okay? Whoop-de-doo. Market comes in, shows another hanging man reversal pattern. You could take that, you would get stopped out again, as you can see. So right, so just it's high probability. So for me on a trade like this, I'm not worried about losing 2 or 3 trades in a row, because if you look at the size of the winning trades, you know what I'm saying, it easily makes up for it. So even if we took these trades based off of trying to stick to a system, we had a large volume candle and a small body reversal, boom, after a breach, close on it, and then we have a hanging man candle next to a wick and a small body candle. Now, if this was engulfing, it'd probably be a little bit stronger, so a little bit weaker. It didn't engulf this candle, so I may have not taken that because of that, right? But if someone felt it was okay, you would have got stopped out. Let's see if we can have, okay, so boom, now we have another, and this is a shooting star, looks like almost, right? A large wick, 70%, you know what I'm saying? And then like 30% body. That's perfect. Sell signals happening right there. So boom, I'm getting in, baby. I'm getting all the way in. All right. So at that point, I'm targeting lows down here, if not here. This is end of day too. It's end of day right here. London session. See? Beginning of New York session. So at this point, there is another sell here. I would be noticing, but again, it's pretty close to moving average. I'm gonna let it pass. Okay, but we have a low, high, low, a buy signal too close to moving average again, so it doesn't qualify. The next level would be somewhere down here then. All right. All right, that's breached. End of London. Okay. Market. End of day. Market open. All right. So we're at current market currently. All right. Market opened over the weekend. Price came up. So looking at everything, okay, this move here from here to here, that's 80 pips. Here to here is 130 pips. So you know what I'm saying? You could hold it to this level, but I mean, after 130 pips, anybody would be satisfied on an intraday move, closing partials. But if you're really trying to hit that aggressive target, you would need to weather this. But I mean, I'm taking profit at anything over 100 pips on Euro USD because that's 2 times above the daily average range. All right. So it dropped 130 pips from this entry here. I'm Gucci. If you would trade, if you know what I'm saying, if I want to be a little bit conservative, I could have traded a target off the tops of these levels here. You know what I'm saying? It came a touch there, bouncing off, right? But again, so if so, I'm now going to be looking for buys, okay, below this level and below this level. All right, this level's actually priced in a low. This level's like not even really noticed. It was such a strong trend. So now looking for sales, one, high, low, lower high, lower low, lower high, lower low, lower high. Okay, this is breaching the lower high here, right? But I'd want to be looking for a breach of this high for another selling opportunity. All right, so another sell opportunity somewhere here is where it's probably going to go, right? This is a continuation. Now, at this point, this was the low priced in, right? For the bullish sentiment. If price comes back down here, it's probably going to go south more because this is that daily low. For this to be a bullish market, this low would have to hold against this low. So the low, higher low, and then this is the higher low. So this is allowable to be breached. Price turning around in between here. Anything below that, no. So I'll wait for this move, right? But again, if we just get price coming up here, selling off, it may sell back down into here, and it just may breach this low, right? Like it may not even breach the low. It may not even breach this low. Okay, it just may breach in this low right in between here, and then go for another buy. So if we get a sell opportunity here, I'm selling it down to here, and then I'm buying from here, hopefully targeting these highs and higher. That's my setup. That's my game plan. Okay, just because you know what I'm saying, I don't know, the daily might be a little sloppy, but if we look at the daily, yep, it's pretty sloppy just because we have all that stuff, right? All right, so if you can see, that blue box was where that low was priced in. Okay, we have that strong volume candle close, small body on the daily reversal, probably doji there, and price takes off for one day. Boom, that strong, hella strong bullish day, right? So we have a 3-bar play happening there. Sell from the top down there. That's 130 pips, right? It came down there, and now it's market. This is a new day on the week today, and it's bullish. It's already that bullish. So if market would want to come down here, like I said, it may come back down somewhere in between here and turn around, right? And if it does, we're buying. So that I mean, just looking at the bullish sentiment, you know what I'm saying, we could easily be targeting, and this is, you know what I'm saying, market recap and projection. We're targeting levels here around 106, right? Yeah, 106.40s, 106.50s, right? Boom. And that's only 120 pips from current market as we speak right now. All right, that's the daily. Back to 15, right? Okay. So that is nice. Another thing I want to say is divergence. If you know divergence, you also can find the strongest setups based off of that. Now, market happening right now, it's not divergent, but it is a nice little lower high setup there. Okay, and I'm just gonna throw this in here just for kickers. This is not part of the strategy. This is just market market flow, right? Above these highs, because you know, markets, you know what I'm saying, it's what's happening. If it violated this level, that's what I'm selling off of. Market breaching, showing a strong, and then I'm expecting this to be a bearish candle, probably engulfing. If not engulfing, it's going to be some type of bearish candle close I would want to expect and anticipate. Plus the RSI being oversold, all right, I'm selling. But I want to show you divergence across these charts now, right? All right. All right. So RSI, 7 period. Okay. Low, and then a lower low, right? Let's do these like, so you can see them. I don't know if you can see that, but anyways, we have market showing that, right? And then I'm gonna show the RSI doing that. So boom, that's a strong buy. Divergence happening there. High, higher high, not really divergence happening there. Low, lower low, and then we have price making a low here and then a lower low there, right? And then we have price RSI making a lower low and then a higher low here on the indicator. So strong divergence, strong buy. Look at that move. Okay, so on these divergence moves, it's against this major downtrend, but we have divergence showing a nice move, a high, lower high, lower high. Uh, yeah, this is diverging. Let's just see. All right, so we have a high priced in there. So it's a triple divergence, high, low, low, low. Market goes from here to here. All right, so I'm gonna do something like, all right, that's where it starts. Market goes from here and it's diverging all the way down there, okay? Okay. So with that divergence, look how strong that sell was. Boom, boom, we get a nice sell-off happening there. Then we have a low priced in there, and then we have that FOMC low pricing in. All right, so from here to there, right? Boom, that was a strong move. Then we have that low going from here to there. If we really wanted to, we can map out this low. It's a little bit more spaced out from here all the way down to here, right? Still divergence. From down here to up there. All right. Boom. Strong buy all the way up here. All right. Let's see if we got some divergence over here. High priced in. Yeah, we do. All right. So if you guys want an extra, you know what I'm saying, situation, you could be only trading after you see divergence because that's what ended up happening. Right. All right. Look at that. Current market. Screenshot this, save as picture, active chart.
can hear you silence. Turning back from all the pain and silence. Big tunes that we speak to that healing. Right now, from inside now, call my name. Fall down when you see me, you know that I was there for you. I will wait for you, for you. I will wait for you. I will wait for you. You make my heart go boom. Oh baby, it's the look in your eyes that makes you the pride. I wish we were together right now. True, you make my body feel loose. Oh baby, it's the way that you lay, the way that you play. I'm praying for forever as well as now. I don't want to hide, I don't want to hide. I don't want to shy from you. No, I don't want to lie, I don't want to lie. Say that I don't want you. So if you could lay your cards right down, I am waiting on the table. If you could show me love somehow, we don't need to have a label. You know that I will love you down. I will be every time faithful. If you could show me all the way around, I will be very, very grateful. Very, very grateful. You make my worries lie away. I'm thinking it's the way that we rotate. It makes me feel okay. So you should come around. Hey, let me show you somewhere safe. Oh baby, you can stop trying to locate, 'cause we find a soulmate in each other.
All right, so I'm gonna be posting those screenshots right over here along with this video and an update so you guys can see last week's recap and current market projection going, right? If you guys are following, commenting right along so you can see all the trades happening there, and so forth. Yep. I think this one was British pound USD, right? So, I mean, again, that's Euro USD. But if I go over here, this is USD chief, okay? So look, I already see a buy opportunity. So I could have done this chart too, but USD chief is pretty much doing the opposite of euro. So sell there, buy, sell, buy. Like I'm just quickly eyeballing it. Buy, strong buy. That's dope. Strong buy there. Okay, then a sell down to that buy. A sell there, right? Then we have a sell there, buy there. Oh man, sell, buy. But like intraday is so beautiful to me because there's never a shortage of opportunity. You know what I'm saying? Like it's just you got to be able to, not be greedy, manage your position, and know that come back the next day and get your 30, 50 pips, right? But anyways, so that's USD chief, right? Anyway, so I'm just gonna post that video. That's the recap of this trading strategy. I don't really have a name for it, but I think that the official name for this is gonna be called the Zivergent. Okay, and real quick, this is a little bonus at the end. Okay, I actually have this into an EA. Okay, my strategy, right? When I'm not always able to catch everything, I'm able to catch it on my Zivergent trading robot here that I coded, right? So what I'm gonna do is I'm gonna run this. Let's see if I can run it from the first. We're gonna go to the 15-minute chart. Put that on half a pip spread, right? This may or may, I have like 3 different versions because trading with the trend and against the trend, I showed you all the entries, right? But I think this is only the sell side. Now, if this is only the sell side, then it's gonna show that. So let's see. Ziverge. All right. So let's see what we got here. So check this out, yo. Uh, Zigzaggy. Okay, right. Let's see what we got. Let's see what we got. This is a simulation, a simulator, right? Let's see if this shows us now that is a little bit too slow because I just want to show y'all a quick little sample here. So let's take this to open prices. It'll do a little bit faster. And then I'm gonna go like that. And then I'm gonna go like that. All right. All right, there we go. Boom, that one's clean right there. Okay, so this one, it's an EA, right? So what's cool about it is I can adjust the targets, the profits, the everything, right? So it looks like we caught this one perfectly, right? That's right exactly where I would have traded manually. It caught those. Now these ones, it noticed the level here, which it did breach that and didn't go, so it took that. Okay, and then it took the area around here, stopped out, and then it didn't take this top. I'm curious to see why, right? I don't know, but it did end up catching some of it. It caught that and then caught that all the way down. So, and then we did see back here, right? Um, market had a few entries, right? So depending on if how aggressive I was feeling, my TPs were a little bit aggressive. So, but this still went down 30 pips, right? Okay, got stopped out, took another entry, and market actually got stopped out again, right? After it went another 30 pips, and it got stopped out this way before dropping, like, you know what I'm saying, to hell, right? You know what I'm saying? I know people get caught and moves like this all the time. So for me, I have a stop loss on this because for the sake of passing, you know what I'm saying, challenges, minimizing the drawdown. But for me, I trust these trades. I would, if I was trading this, I wouldn't place stops if my EA was trading the strategy because I know it would hit every time. It would take drawdown, right? It would take like this trade would probably take, you know what I'm saying, 50 pips of drawdown, but it'd be dropping, you know what I'm saying, to my target of what, 80 pips, 90 pips, yeah. So depending on how aggressive I'm feeling, that's the thing about the EA. It's gonna smack 30 pips easy on every one of the entries. It would smack 30 pips, you know. um so trade, oh, this first trade was killer. That first trade was something else. That was dope, right? So just from that, just from the month of June so far, you know what I'm saying, it didn't do bad. Okay. So for the sake of the account, it did. I mean, these stats aren't all the way. I'm gonna base this off of. Let's just go off of a 100K account. Our trading size is. Now let's just go off of. What are we doing here? Our trade size. Let's do let's do 3 lots. All right, so I'm gonna run this through real quick just to look at the stats. Boom, and we got that. All right, so we did 8,000, 8%, 8.3%. Okay, absolute drawdown 1.2%, maximal drawdown 4.8%. Now, that's cool. You know, like I said, um, I can be super aggressive, or I can sit here and just do something like this. I can do 30 pip stop, 30 pip target, 1-to-1. You know what I'm saying? Have all these trades hit pretty much, right? Um, win ratio, okay, is a little bit better. So now profit's gonna be smaller, but everything is, right? So we won 8 out of 11 trades. 4.6% return and 2.6% drawdown. So that's in what, 2-3 weeks of trading. You know what I'm saying? Not even catching all the positions, but you know what I'm saying? Like, it's consistent. So you'll have good months, you have bad months. But for me to not, like, you know what I'm saying? I'll outperform a robot any day because I'm able to use discretion. But for the sake of, you know what I'm saying, this being able to bang out strategy and pass a challenge, right? Yeah, simple. And this is only the sell side. It's not even taking the, you know what I'm saying, the buy sides. But I just want to show you that little teaser. I can, you know what I'm saying? I can, let me see. Let's see. Let's do long. I think those are the longs. Let's see what this shows up like. This should be catching the long trades. Okay, all right. Yeah, there we go. Nope. Hmm. That other one should have, oh, taken a trade up there for a sell, but all right. So the EA is buying off of these levels over here, right? And there's a pretty tight stop and a hedging actual. That's what you see here. So this is taking long trades, right? But the stop is like when the stop's getting hit at 9 pips, it's actually opening a counter trade to recover that loss, right? So it opens a sell once that stop is hit. We have a long trade. I think this is the only successful long trade that TP'd out. So that was boom, that hit nice, boom, and this came down and closed out this sell trade here to finish. You know what I'm saying, to finish hedging out that trade there. So we caught that long, boom. We tried entering another long, got stopped out immediately, and the market sells those trades. So it really is a beautiful way to mitigate some of the risk when you're trading. Yeah, all these got stopped. That was the only successful long trade. So buy trade got stopped out and got hedged out. That's something I personally use as far as a risk management strategy. It looks beautiful. You know what I'm saying? And it does well, right? So just with that there, I mean, um, we're able to see what that do. But this is trading size. What's the trading size? Volume size 1, right? 3. That was the size of the other one. Right, okay. So this one did about, like I said, 4.9%, almost 5%, and that is 2% drawdown, right? So if you have this running, right, you have the buy side and the sell side trading the strategy, you know what I'm saying? You're risking about 4% on both. You know what I'm saying? This is running 2, that one's running 2.5, right? And then you're hitting about 9-10%. That's passing, that'll pass a challenge. Okay, and that's just at trading, you know, just a 3 standard lots just on Euro USD. I turn it down on, you know what I'm saying, for sure, once you have like a funded account type thing. But to pass a challenge, it kind of sucks because they do make you try to force it in 30 days. But again, this is only off of you know, from January 1st to date. So that's only like 3 weeks of trading activity, not even 30 days, right? So yeah, so if you would have, it could definitely do its job. So I'm excited. I got this into an EA. If you guys are interested in that, you know how to contact me. If not, get in my DMs. I do have a mentorship group, and we do have live trading sessions in the morning, 6:30, 9:30 Eastern. Okay, and you know what I'm saying, that's how we're doing it, guys. That's how we're doing it. Let me know. Hope you guys enjoyed the video. Hope it's not too long. Hope you guys got something to add to your toolbox, and catch you later.